that, we continue to see solid demand and no real early indications of any sort of deterioration or weakening in that regard.
I'm here today with Eric Bolton, Chairman and CEO of MAA. So Eric, how do current demand trends you're seeing position MAA heading into 2023, and how is the company placed to deal with economic headwinds ahead?
Well, based on what we're seeing at the moment, the demand side of our business continues to hold up pretty well. In the third quarter, we just reported earnings results last week. Our leasing traffic levels were actually running ahead of prior year. We continue to see continued job growth across these Sunbelt markets where we focus our capital, and move outs to people buying single-family homes continues to be down, and as a consequence continues to keep a lot more households in the rental market, in the apartment rental market. So as a consequence of all that, we continue to see solid demand and no real early indications of any sort of deterioration or weakening in that regard. Migration trends continue to hold up as well. We continue to see a higher level of leases being written to people coming into the Sun Belt for the first time from some of the coastal markets. So all these things continue to fuel a generally pretty positive demand trends for our portfolio. I do think as you begin to think about 2023 and an uncertain environment and the prospects of a recession, if you will, all that could certainly change the chemistry that we now enjoy, and we could see moderation of some sort begin to show up. But as of yet, we haven't seen it. I will say, though, in the event that we do find ourselves in a much weaker economy, a much weaker employment market, that we think that the MAA story has, as it has historically, will likely hold up better as a consequence of the focus on the Sun Belt, but more importantly, the diversification we have across the Sun Belt in both large and secondary markets, which tend to offer a little bit of a downside protection to the performance of the company in the event of a recession. So we'll see what 2023 holds in store, but for the moment, all the trends are pretty positive.
What trends is MAA seeing in terms of new supply within its targeted market focus, as well as more broadly across the Sunbelt region?
Well, supply levels are high, and they've been high for the last 4 or 5 years, and I think that it moderated a little bit in 2020 during the worst of COVID and early 21, but supply levels have been pretty elevated, something around 3 to 4% of the existing stock in the markets broadly, coming into the market in terms of 3 to 4% new coming into the market, and it varies a bit by market. Austin can be a little bit higher than, say, Dallas or Atlanta, but generally the system, if you will, that sort of gives birth to new supply, where there's permitting and all the zoning processes and the inspections that have to occur, and then just general contractors and the access to contract labor, all those systems are kind of at full capacity right now. So we don't see supply levels in 2023 being elevated much more than they are right now. We think that 23 supply deliveries are going to be somewhat similar to what we see in 2022. And again, it's going to vary a little bit by market. We tend to see more of the pressure in some of the larger cities versus some of the secondary markets. But on balance, the question for us always is, what's happening on the demand side of the equation? And even to give you some perspective on this, I mean, one of the most oversupplied markets, if you will, or one of the markets being the most supplied is, say, Austin, Texas, where we've seen a lot of supply. But that's also a market where we've seen some of our strongest rent growth, because the demand for housing was so strong there, it was more than offsetting the supply pressure. So for us right now, we just, as we think about 2023 supply deliveries, I would characterize it as continued high levels, similar to what we've been seeing for the last couple of years.
And does the MAA anticipate potential market acquisitions as a result of market uncertainty? And what sorts of assets would be most interesting to you?
Well, we do think that it's possible, and I hope likely, that we will see more acquisition opportunities begin to emerge as we get into 2023. The market's very much in kind of a standstill pattern at the moment, but we do think as we get later into 23 and into 24 that with a higher rate, interest rates that we see, and some of the refinancings are going to happen with a lot of the product that got built and or developed or purchased in the last number of years, there's going to be some opportunities that are going to start to emerge, and we feel like that we're in a great position to jump on that. And more often than not, the product that we're looking at is generally a fairly newly built property. In many cases, a lot of the acquisitions that we've been making are properties that are still in lease up, that are facing the need for refinancing out of the construction financing program that they were in. So that generally is where we target a lot of our acquisition activity, is where we can come in and find properties that are perhaps not quite yet stabilized or still under construction, even in some cases where the financing opportunities for that is a little bit more limited. We can come in as an all-cash buyer and generally negotiate a deal that makes sense for us.